In today's video, I will show you the best exponential moving average strategy that I know with 3 moving average indicators. It will be a really interesting video, so I highly recommend for you to watch it to the end. And I don't want to waste your time, so let's just jump into the details and I will share the actual numbers and parameters with you. We will need 2 exponential moving averages. We will have 2 conditions for the buy entry and 2 conditions for the sell entry, and now I show you the real numbers. First, we will need a 21 period exponential moving average, and then we will need a 77 period exponential moving average. And when we take the trade, our smaller exponential moving average, so here the blue line, has to be above our bigger exponential moving average that now is the red line. This is our first condition. Now I will show you the second condition. The second condition will be a crossover. It is really important to follow these exact numbers that I tell you to be the parameters of the exponential moving averages. The second condition is that you will need a 41 period exponential moving average, and you will need a 217 period exponential moving average. And we take the trade at the exact moment here when the blue line crosses above the red line. So basically when the smaller EMA crosses above the bigger EMA, the bigger period EMA. And then we start the trade. Of course, at that moment the first condition has to be at the right place too. This is our entry condition. As you see, it is really simple. And now I want to show you how the trade went, because in my opinion this was a very good trade, and it was just amazing to see how this strategy worked in real time. Let's see when we will close it, because of course I will tell you the closing, the dynamic exit closing strategy as well, because that is really important too. Now, one of the main things when it comes to the dynamic exit strategy is that you have to wait 1500 minutes after the entry of the trade before you start to even look for the dynamic exit. That is really important. So you can't just jump into a trade and out of a trade and then over and over again, and you can't open multiple trades at once per currency. What does it mean? It means that first of all, you will carry 1 trade at once per currency. So if you run the strategy on 5 currencies, you can trade maximum 5 trades at once. And you have to wait 1500 minutes after an entry, so you will filter out the noise very good. This is really important to any trading strategy that I tested, that is thousands actually, because I am a coder and I coded a lot of strategies for clients, custom EAs and stuff. Now that is the place where we closed our trade, and now I will show you and I will tell you why we closed the trade there. And listen, because the exit strategy is just that important as the entry strategy, and in fact I would say sometimes it is more important. So let's see, I will just show it to you this way as well, because it is really great to see it in an overall picture, in a bigger picture, and how we actually close the trade before an ugly ranging market started. So we basically have ridden the trend, so we got great pips from the trend, from the uptrend, and then we closed the trade before that ugly ranging market that is, in my opinion, not so tradable. Now let's see the exit strategy. I will remove this because I don't need it and you don't need it either. We will need a 21 period EMA and we will need a 120 period EMA, and then we'll just go here and let's take a look at it, because we close the trade. We have a three-way system. When 1500 minutes passed, after that we started to look for the dynamic exit opportunities. Then we created a safety stop loss that is 100 pips. Then we started to look for the 21 period EMA to cross below the 120 period EMA, and right there it almost happened here, but it did not actually happen, and it happened here first. So then we could close the trade at a very profitable place, and in my opinion it shows how good this strategy manages these scenarios, these trend following scenarios. And now that I showed you the buy entry and buy exit rules, I hope you understood it well. If not, just ask me in the comment section, because I'm glad to answer all the questions. And if you like this video at all, just leave a like, subscribe, because I just started this channel and I am really excited to share my strategies with you, because as I said, I coded thousands of strategies and I have many strategies that I want to share with you. So now I tell you the sell entry and sell exit rules. They are just as easy as the buy entry and buy exit rules, and let's just jump into it, because this is an exciting strategy. As you see, here is the sell trade that I selected to show as an example, and at the end of the video, at the search section, I will show you the 99.9% quality backtest statistics of this strategy. That will be really interesting, because all the trades that I show here in this video were taken from the test that the algorithm did. So these are not trades that I just drew up to the chart. These are real trades that the algorithm did, because I believe that humans tend to be a bit too optimistic with this kind of stuff. That's why I backtest with 99.9% quality data with variable spread and commission and slippage, because most traders miss that step and they tend to believe that their strategy is not good and they backtested it wrong, but that's not the truth. They just miss these informations and miss these steps to add to the backtest, so they don't add the spread, the slippage, commission, and that's why overall in life their strategies won't work. This is really important stuff. Let's see the sell entry. To the sell entry we will need a 71 period EMA, and then we will need a 137 period EMA, and the smaller EMA, so here the blue line, has to be below the bigger, so the red line. It is really simple. So now I'm just showing you the crossover strategy. The crossover strategy is the following. The 71 period EMA has to cross below the 217 period EMA, and yeah, right there it happens, because as you see it, I just a little bit, I'm showing you it closer. It happens right here. Yeah, it is a cross, but if you want to be sure, I would recommend to open the trade here, but the algorithm actually opened it here. Maybe the lines are a bit too wide and it doesn't show the details, but it crossed. Now this is our two conditions for the buy, and I will just remove this because we don't need it furthermore, And I'm showing you that we basically enter the market here, and then of course we were in the trade, and I have to add that with the sell trades as well, you have to wait 1500 minutes after entry to actually look for the dynamic exits. Really important, and you have to always consider it when you are trading, because it is just crucial. As you see, the market was in our favor very much, and these are not some small pip trades at all. And now I am telling you what is the dynamic exit for the sell trades, because as you see, it is a really successful strategy, and you might be curious what is it. Now, it is really simple, but first I show it to you once more, that as you see, of course there is no perfect strategy or holy grail strategy, but the algorithm did what it had to do, and when the trend started to turn back, it closed the trade. And that is really important if you are a trend trader, because then you know your profits will be vanished by the ranging markets or the reversal of the trend. That's not the goal. Now, for this we will need a 24 period EMA, and then we will need a 220 period EMA. And when the smaller EMA crosses above the bigger EMA, then we close the trade. And it is really powerful that we are using an asymmetrical strategy, and actually coders who were kind of struggling with the dynamic exits wrote to me on Telegram, and they told me that yeah, I added this actually three coders who are just, you know, one hobby coder and one who is working for clients as well. So every kind of person who was interested in coding robots wrote to me that, man, this kind of asymmetrical dynamic exit helped a lot. And it is because big banks and hedge funds know the completely symmetrical strategies and all these strategies that every trader is using, and that is not so powerful anymore. But if you are using some kind of different trading, then it is just well known by the big banks and hedge funds, then you will have an edge over the market and over other traders, and that's the goal. Now, as you see here, it happened, and it was, in my opinion, a very great trade, and the strategy is one of my favorite of the EMA strategies and the moving average crossover strategies. I have to add, because it's really important for every strategy, a safety stop loss of approximately 100 pips. Follow this rule, because if you don't follow it, if a crash, crisis happens, or something happens in the world, even some minor events or some manipulation, you will blow your account. And so protect your funds. This is really important to every strategy. Now I will show you the 99.9% T-data backtest, and I will explain it to you a little bit further. Here we are in MT4, and here are all the trades that the algorithm did. Basically, it's a great trade too. There are some really nice trades. Man, this trade is awesome. Can you see that? That is some, I don't know how many pips, but it's a huge trade. It is a huge trade too. There are some minor losing trades, of course. That is part of the game, but mostly just really great trades. The strategy is very good. Now I show you the report. Now it says that it is 99.9% tick data, of course, it is zero mismatch chart errors, so it is really important too. And the is really important for me personally is the risk to reward ratio. I care about risk to reward ratio the most, and the largest profitable trade to loss trade. And as you see, the average profit trade is 3 times bigger than the average loss trade, so it means that we have a 1 to 3 risk to reward ratio for the first time in the history of the channel, because most of the time it is 1 to 2 or 1 to a little bit more, but it is 1 to 3 risk to reward ratio, and I really like that. And the largest profitable trade is so much higher than the largest loss trade. That is insane. So overall, with a drawdown that is really low, we have a great strategy in hand, and there are some trades. As you see, the dynamic exit treats and manages the trades very well, because most of the time when it sees that it will be a losing trade, it closes them pretty early, and when it sees that it will be a great trade, it has potential, it let them run. And it is the key to every hedge fund manager, that cut losses, quickly let winners run. It is the key to trading, and the strategy does exactly that. I hope you enjoyed this video. If you did, you know what to do. Ciao.